Welcome to Dr. Fred Markets. This is not financial advice. While most people ignore what's happening in the markets, a few choose to pay attention. And that difference, that simple choice to stay informed, changes everything. You're one of them. Let's get into it.
You are not bad with money. Your crypto is sabotaging your life. Verdict first, if your net worth chart looks like Bitcoin's chart, your entire financial lifestyle is a leveraged meme. You're turning your rent, your relationships, and your mental health into a perpetual futures contract on internet magic beans, and the market does not care about your feelings. Signal 1. Bitcoin today, $77,390, up 0.83%. That is not a price, that is a personality test. At this level, every 10% swing is a used car evaporating or appearing on your balance sheet. You know this. Your heart rate knows this. But here's the real stat. For the average retail investor over the last cycles, realized returns on Bitcoin are dramatically lower than Bitcoin's headline returns because they lived like degens while holding it. They chased tops, panic sold bottoms, and upgraded their lifestyle every time BTC printed a new all-time high. The coin performed, their habits did not. Signal 2, Ethereum at $2,134, up 1.19%. ETH has outperformed the average person's career growth by a clownish margin. Yet the typical ETH holder's actual net worth progress trails a boring worker who just maxed a 401k and didn't watch price candles over lunch. Why? Because crypto rich instantly becomes lifestyle poor. New phone, new car, new apartment, then the drawdown hits, and suddenly rent is a margin call. Signal 3, S&P 500 at 740, up 0.88%, Nvidia at $224, up 1.97%. Trade markets quietly climb while you refresh your crypto portfolio 19 times a day like it's a slot machine. The S&P doesn't DM you WAGMI. Nvidia doesn't post memes. But those boring assets are the ones underwriting the retirement of everyone who stopped treating investing like a personality and treated it like plumbing. Invisible, reliable, unexciting. Here's the cliffhanger. The problem is not that you own crypto. The problem is that you redesigned your entire life around its volatility, then blamed the market for the hangover. The connection. Crypto is not ruining you. Your financial lifestyle is running a scam on your crypto. You built a system where any pump forces lifestyle inflation and any dump forces panic. That system guarantees underperformance no matter how high Bitcoin flies. Mechanism number 1. Time preference. Crypto is a low time preference asset trapped in a high time preference life. Bitcoin's real edge lives on a 4 to 10 year horizon. Meanwhile, you're trading it emotionally on a 4 to 10 minute feed. High time preference lifestyle plus low time preference asset equals chronic self-liquidation, not on an exchange, in your brain. Mechanism number 2. Mental leverage. You think I'm unlevered, I'm spot only. Lie. If your rent, social status, self-worth, and weekend plans all depend on green candles, you are max levered.
Does what you just heard shift something for you? That feeling, that need to know more, is exactly the right reaction. Most people never get there. You just did. Let's keep going.
Every dip isn't just price action. It's an existential crisis. You overtrade because you're not managing risk, you're managing emotion. Mechanism number 3, identity creep. The second your bio says crypto, every decision becomes content. You stop asking what builds net worth and start asking what sounds cool in the group chat. You swap budgeting for bravado, emergency fund for engagement, and discipline for dopamine. That is how people lose money in a bull market. Here is the one concrete thing nobody told you. You don't need a crypto strategy. You need a crypto-compatible lifestyle. A crypto-compatible lifestyle does 3 ruthless things. First, it quarantines your basics. Rent, food, insurance, boring savings, all funded by fiat income and boring assets. Non-negotiable. If Bitcoin went to zero tomorrow, your actual life doesn't flinch. That's not weakness, that's armor. Second, it hard codes a sell discipline before you buy. Example, anytime my total crypto stack doubles from cost basis, I automatically pull out 25 to 30% into boring stuff and never look back. Not when it feels right, not when Twitter turns bearish. Written rule, automatic. Because bull markets are not opportunities, they are stress tests of your ability to say enough. Third, it caps your obsession. 1 portfolio check a day, no exceptions. Not because Zen, but because every extra check pushes you toward emotional trades, lifestyle upgrades, and dumb flexes that bleed your future for today's ego hit. So what does this mean for you right now with Bitcoin at 77K and green candles everywhere? Verdict: if your lifestyle does not survive a 60% crypto crash without a meltdown, you are not an investor. You are unpaid collateral. This is not financial advice, but here is the truth. 1. Crypto will outperform your income over long stretches. Your real job is to stop your lifestyle from underperforming your crypto. 2. Separating life money from crypto money is not optional. It's the difference between using volatility and being used by it. 3. Write one rule today: a fixed sell down or skim rule on big gains and a hard cap on how often you check prices, then follow it like a religion. You don't need another altcoin. You need a boring, brutally honest budget that lets you hold your winners without burning your actual life to the ground. If you felt attacked, good. That means your lifestyle is over-levered to the chart. Fix that, and every future bull run stops being psychological warfare and starts being what it should have been from day one: a tool. Subscribe, come back tomorrow, and we'll keep dismantling the lies your portfolio tells you, one brutal truth at a time. This is not financial advice. If you enjoyed this video, please subscribe to the channel and check the links in the first comment below.
That's it for today on Dr. Fred Markets. I hope this gave you clarity and a new perspective. Remember, this is not financial advice. Always do your own research. If you found this useful, subscribe. It's free and it helps the channel grow. Find me on the blog at drfredmarkets.com and join the newsletter via the link in bio. I'm Dr. Fred Markets. See you in the next one.